Hi, I'm Dana Barrett, and this is Commerce TV. One of the biggest problems new companies and companies in growth mode deal with is finding money. I mean, I think we'd all like to find money, but companies that are growing probably need it more than some of us. There are lots of traditional ways like banks to get money, and there's lots of non-traditional ways we keep hearing about like crowdfunding. But there are more options than just that, and some are easier than others. Here today to talk about some non-traditional financing methods is William Coleman. Welcome to the show.
Well, thank you, Dana.
So William, your company is?
Bridge Financial Group is involved in non-traditional financing resources and sources. We also get involved in deal partnering and also import-export transactions.
So a lot of this stuff is probably pretty complex for some people. Let's break it down a little bit. What kind of industries can really make use of some non-traditional financing?
Well, non-traditional financing is more commonly used than most would expect.
Okay.
Because you can use non-traditional financing to grow companies and also for startups. We prefer to use trade finance because with trade finance you can use receivables that are due from large creditworthy customers as the credit and collateral in that transaction.
So it's almost like if I'm a startup, I don't have to put my house up as collateral, for example, but if I've got that one contract where I know I'm going to have those receivables, I can take advantage of this.
Exactly. You may be a newly released employee from a large corporation, but you know what you're doing, and you just go and sell back to that corporation.
I like that, newly released.
Yeah.
That's a good way of saying it.
Newly released is an excellent way of saying it.
A lot of people are trying to come up with terms these days to describe their transitions.
Right.
But it's interesting because I think one of the things that gets in the way for people when they're thinking about maybe going into a business is, well, where am I going to get funding?
Right.
What are the different kinds of things that are available? So the receivables, the trade financing you talked about is one option, but you mentioned some other things. Give me a little bit more of a breakdown on some of the other services you offer.
Well, we offer deal partnering. If you are a company that's out in the marketplace is trying to sell your products or services, but you may not have the marketing side of it, or you may not have the technical expertise, we can simply partner with you to give you what you don't have, so jointly we can be successful in delivering products or services to either those large corporations or those municipalities.
I think that's so fascinating. I think there's probably so many things that you guys do that a lot of people considering getting into a new business wouldn't even know exists.
Well, yeah, we helped one young guy to start up his business model, and he needed a very large credit facility, so we were able to arrange a $100 million credit facility such that he can go out in the marketplace and he can deliver about $800 million in new sales.
Wow. So when you're looking at somebody and thinking about whether or not you want to get into business with them, what kind of qualifications do they need to have?
Well, we don't look for newbies when we want to get in business with other companies. We really want you to be mature at that stage.
So when someone's dealing with that kind of financing relationship, are they giving up ownership? Are you getting in bed with them in terms of owning their company?
No, primarily we do these transactions with debt.
Okay.
And not equity.
Okay.
And a lot of times you may be out looking for equity for transactions. And my comment is, have you ever thought of debt? And the comment comes back, who's making loans for acquisitions? Well, we have partners that are making loans for acquisitions. So it's cheaper to acquire business with debt rather than equity, because equity is permanent debt.
Yeah.
And it's very expensive. You can give away up to 50% of your company to an equity partner.
Yes.
On a debt side of the ledger, you're only paying a premium to the lender in order to receive those funds to go out and acquire companies.
Fascinating. There are so many things out there that I think people really don't know about, a lot to explore, a lot to think about. If they do want to get in touch with you, how can they find you?
Well, they can find me at william.coleman@bfgincorporated.com.
Okay.
That's the best way to get in contact with me, or 678-258-358-8620.
And of course, they can just go on the website, bfgincorporated.com, and sort of look at some more information about what you do.
Yeah, we have examples of transactions that we've closed on. We have a little example of how we're set up from the financing to the deal structuring, and also over in import-export. You can also use import-export in trade finance. It doesn't have to be a domestic transaction. You can be importing materials from Italy into America to these large retailers. We can help you finance those transactions out of Italy all the way into the retailer with not any of your money, doing it all with debt financing.
Interesting. Really, really good stuff. Good information. If you're looking for non-traditional financing, I think you know where you need to look. This has been another episode of Commerce TV. Thank you, William, so much for joining me. We'll see you next time.
Thank you.